Hold on. Okay. So just to reiterate, in the very, very short term, until Apple earnings, I think we will be marching ahead. Oh, are you guys able to hear me?
Yeah.
Okay, I got a notification that you have been signed out of Zoom, so I don't know what's happening. Because I think Nick also joined using the same account, but let's see. I think we should be able to continue. All right. So if you take a look at this trend line in NDX, okay, we are about to flirt with this level again. So another 100 to 150 points is easy. Maybe we will hit that on Sunday night itself if the momentum continues. Right. So I am expecting further upside. Obviously, I didn't expect, I was bullish, but I didn't expect this kind of a move within one day on Friday. This is weekly, but it was still a pretty big day on Friday. This one, this entire move happened in one day, almost back to, and see where we closed. We closed above this high, uh, the closing prices. And if we take the high of this bar, it is 615. Look at this high point here, 615.95, and the closing price is 619. So we closed above all these highs. That is pretty bullish. I expect this momentum to continue and hit this level. So I was mentioning about people asked me whether to short, right, on Friday. So I said, no, don't short it at. I think someone asked, is it a good place to short at 6:30? Right. I said, no, don't short it because this short squeeze rallies can continue. See, obviously, we didn't make use of the full move here, but I'm okay as long as we caught a good chunk of this move. And of course, Netflix trade was earnings related trade. It did not work out for me. But other than that, we got the levels pretty good. I would say. Even Nick had posted some of the levels for years. So always keep an eye on the index. It doesn't matter whether you're trading Tesla or Amazon on your own, right? So the simple reason for me to say that this was a point where we will find some support is because of this level, right? So this is a band where we had previously bounced. It was a resistance, and on the way down it becomes support. It's as simple as that. So if you are curious to know about the levels, like why this became a support, so this is pretty bullish. I expect it to go and hit this, and I wouldn't be surprised if the short covering rally continues, mainly because I look at few other things, where, let me go here. Single. Okay, I want to go to a single one. All right. So, and I don't want any studies. Remove all studies. Okay. So if you look at the put call ratio, you know what? Actually, I have a better chart for this. Just a second. I'm going to share it here. Okay. I shared it from my phone. Yeah, this is better. So if you look at this, This is a long-term chart of S&P 500 and the put call ratio. When we are here in this area, this is usually not a good place to stay bearish for long. That's why I think, if I remember it properly, Vyas or someone asked in the group whether can I buy a put which is 4 to 5 weeks away, or go with some SQQQ or something. I usually don't trade those kind of ETFs. It's a scam. Those kind of ETFs, you usually end up losing money unless you day trade it. So I would rather go and short the index if I'm bearish, or go with put or put spreads if I'm bearish. But this is not a place to be overly bearish, in my opinion. There is still a lot of people are still short in this market, thinking that we are going to go and puke like it happened in 2008 and year 2000, 2002. We are not in that kind of market. I know it is bearish. This is by no means I'm saying that this is a bullish market. We are still in a bearish trend. But when you see something of this kind happening, this is not the place where you want to be bearish. You want to be bearish when everyone else is bullish, right? Unfortunately, that's how the market works. It is built for most people to lose money if you are not careful, or if you don't know what you're doing. So when the market peaked in August, look at where everyone was bullish at that time. And that is when you have to wear a bearish hat. Not right now, not here. This has come down quite a bit recently, but put call ratio, if you see this is the ratio, right? A simple ratio, numerator and denominator. If there are more number of people, if when it goes above 1, there are no more number of puts than calls in the market. That's usually a good recipe for a bounce, and that's what happened by end of December into January. So this is something to keep an eye on until it comes down to about below, I would say below 0.6. I would not be looking at bearish trades. And there is a lot of short momentum, short squeeze fuel left in this market. So this can rally further and break above this trend line, which will get more people excited about bull market resuming. That is when we need to be contra traders. Okay, we'll take it by the week, by the day. Obviously, we are here every day. I'm expecting. I wouldn't be surprised if we go and test this line. In fact, okay, I might sound very bullish, but I'm bullish for a reason. It's not without any reason. Of course, the Apple and Microsoft charts are not looking good. That is the only caveat I would put for my bullish view. If Apple disappoints and falls below 130, I put that in the group as well. Set alerts if it falls below 130, this level, and Microsoft below 130. Be extremely careful, because this is a magnet. It will quickly fall another 10 points, $10. And if Apple falls $10, you can imagine what can happen to the market, right? We will go down pretty quickly at that time. So, and also this trend line, which is way below at 108 or so. And that, if you see, is a big area of support for Apple. Oops, I have to take this, right? So this is a pretty big area of support for Apple. So this is the only caveat I would put for this, my bullish view. So of course, you cannot stay bullish forever and bearish forever. That's a recipe for disaster. Let's take a look at Microsoft. Again, Microsoft came down to this 200 week moving average, which is in a way good, right? But Apple still hasn't done that. So we'll keep an eye on these two. And the real support for Microsoft is actually not here. I don't expect this to hold. If it starts coming down, real support for it is here. Okay, around 180 is where, if I want to be a long-term investor in Microsoft, this is where I want to be a buyer. These are the last two pillars of this market. Let's quickly take a look at others. Nothing much has changed. Tesla. So this was a good support, as we saw last week, right? I spoke about this. It came down to this level. I had, if some of our long-term members remember, I had mentioned about this in our November session, I think. And this is exactly, it hit that to the dot and bounced. But this is, I'm not going to be bullish here on Tesla after a 30% rally. This is too much in a short span of time. This is a broken chart. This is a broken chart for bulls for sure. And for bears, I think a better entry would be somewhere around 150 to short it again. 142 might also offer good amount of resistance, which is again a good 10 points rally from here, right? That is probably a place where we can get bearish on Tesla. Nvidia, nothing much has changed. Yep.
On Tesla, can you show how you arrived at that level in November, the 102.75?
Who is this asking?
Param.
Okay. Hey, Param, let's take a look at that. Tesla. So this was a big head and shoulders formation in the longer term charts, and the neckline is here. This, I took this as the support. And you have to measure an equal distance from the shoulders to the neckline. If you take that equal distance, it comes to 102.
Okay, thanks.
Okay. So that's exactly where it found support.
I've also read sometimes they take distance between the neckline and the heads. Is that the final target?
Yeah, possible, but usually the first level, see, I don't usually go to the final target because it's very hard to, even if you have that kind of bearish view, some people will say, the most of these Elliott wave traders, they'll say, oh, this is 1 and this is 2 and this is 3, and then it will go to the moon. You might have seen charts of that nature. Who has the courage to hold options for this long? If you are an options trader, maybe if you're a stock trader, you can hold it for years and weeks, right? But options, come on, it's impractical to have that kind of view. Even if it does, you might not be able to make money, right? So I go with the nearest target and then take it from there, right? That's what we usually do in these sessions as well, right? Where is the next nearest target? Because see, I don't care what happens in the next 6 months. I'm worried about what happens in the next 4 or 5 weeks for me to make money. And our of course, this is a wrong advice if you are an investor. I'm talking about very short-term trading. because we are taking money out of the market regularly, consistently. And if you want to do that, you need to have bigger picture view as well as a short-term view.
Right. And yeah, swing trading.
So I'll add to this. Like initially, I'm not buying Tesla anytime soon. I don't really care for it either. But so original first target was 150, second was 100. I mean, technically, precisely it hasn't hit, but 101, I call it pretty close because I don't watch for it to the exact tick. Me personally, and I am willing to be a Tesla buyer. Not like a full position, but at least closer to half position around mid 70s. So if your thing adds up to that from your head to whatever, maybe. I don't necessarily just completely go theoretically. Just kind of hold on to that, like, oh, this is what it says. But
Right. Yeah. Thanks, Nick. Thanks, Pradeep.
Sure, no problem. So NVIDIA, again, it is coming up to a pretty big area of resistance. I expect it to rally further up to 190. So again, if you want to apply the same logic of that head and shoulders, this looks like head and shoulders forming, and it can go and revisit at least this neckline. I don't expect it to break above that. So this momentum also, if you see this, it has traded above its 200-day moving average again. This is a place where a lot of long-term investors feel comfortable getting in around 200 and expecting some further up move. So but the good part of the move is already done. If you want to draw this as a cup and handle, a big cup, a big handle that had formed, or even this, if you want to see it as a cup and handle forming, it can again come down here and then rally further. But I think this is a pretty big area of resistance for it to cross. And I wouldn't be surprised if it hits, what is it, the lower end of this, 180, 185. But yeah, I'm not going to be trading this in a bullish manner. I would rather go with the index, which has the momentum. It can rally further.
Something like this could happen with the SPX, go above the trend line and then get everybody excited.
Yeah, that's definitely possible. See what happens, right? It went above, got everyone excited, and the next week, see the big move down here. So that can happen, and maybe I haven't drawn this in a perfect manner. Let me redraw it. I had probably taken the closing prices. Let me connect the highs from here to here and extend it all the way to the right. Okay, I had probably considered this and this as another one. Maybe that was the reason for the other drawing I had. So yeah, it has traded above that, and see what happens usually, get everyone excited. It has broken above the trend and then surprise, right? So that's what I expect even with SPX. Get above that trend line and then surprise everyone. So all the trend line, because trend line is very subjective. If you see in this example itself, right, it's very subjective. I pay more attention, more weightage to horizontal lines, because there is no two way around a horizontal line. If I draw this as a support, this line here, there is no two ways about it. it is a support, but trend line is usually, it's left to the discretion of the person who is using it. So use it carefully, because I remember a lot of people, I don't know whether some of you might have been with us from the time of our big group, which had 3,000, the free group, where people kept on drawing trend lines for Amazon, that it is going to go to 4,000 at that time. I think it was trading around 3,000 and people were expecting 4,000. And a lot of people, I remember, even bought 4,000 calls, far out the money call. And the reason was, the way they all drew the trend lines was, okay, oh, it is breaking out. What happened? Oh, big surprise, right? And then you draw it another way, extend it all the way here. Oh, it is breaking out. What happened? Another dump. Yeah, of course, this lasted a bit more, but that is usually the problem with trend lines, right? It is left to the way you draw it. I could have drawn this trend line here. Oh, it broke above. It broke above. How many days it lasted? 2 weeks, right? 2 to 3 weeks maybe. And then a big dump. So all those people who bought 4,000 calls, so 4,000 corresponds to 200 here, okay? Because it split, I think 1:20. So it never hit 4,000.
Zoom calls.
So be careful with trend lines. Having said that, if I look at this, I would rather trade on the way up to the trend line. Don't get excited when it actually hits the trend line. Nick, I think you stopped me from.
I was trying to mute someone, so I had to reclaim the host. But here, I'll pass it on. Sorry.
Okay. Okay. So I would rather trade in a contrary way and trade up to the trend line. And don't get excited once the trend line is broken. That is for the losers to trade. So even if it breaks out, I won't be excited. I want a confirmation of the breakout. And there are various ways where you can use the confirmation method. Okay. So yeah, that's a topic for another day, maybe. Now that's all I had actually to share. Anything else you guys want me to take a look at? Let's stay with the big cap names in the interest of everyone. And I'm also recording this session. So please don't give me penny stocks, no crypto. Let's talk about the big cap names, which we usually trade and which is going to help others.
Pradeep, can we look at the put call ratio chart again?
Sure. So here it is.
So that recent spike, I think that happened after SPX started trading options every day. So a lot of 0DT puts and calls. So is it still as reliable as it used to be?
Yeah, I think we have been having zero. How many days? It has been more than 6-7 months, or more than
probably November is when it started. 5 days.
Yeah, we started November. So I'll say this, and this is just my opinion only. The 0-day and the SPX options does have an impact, but it's a short-term impact that you'll see like a random spike or a hold of a price just longer than usual, and then just to it's just to have the expiry work a certain way, whatever. But then the overall trend, you'll still see if the ratios are still holding in a long term.
Okay.
But once again, I don't look at the put call ratio personally as much. That's and not to ignore it either. I think everyone has their way, that their recipe that they have made and that works for them. So never. I'm not here to discredit or just say like, okay, that's invalid, or I mean, there would be things that I would say they're invalid, but or that I don't really necessarily care for, but I'm not saying that about this. That it's just your own way how you look at it.
Right. Yeah, in general, option trading has changed in the last few years. I mean, especially after COVID, everybody became trader trading options. So, I mean, there are trillions of dollars of options expiring on the month end now. So, so that's what I was thinking. Another thing, so these additional or increase in puts here, um, could that be so? I mean, of course, somebody's selling puts, somebody's buying puts. So the Wall Streeters, they are selling puts, like we read about the Chase, Strangle, or whatever. Um, so since more people are selling puts or buying puts rather as protection, is that also stopping market from taking that big dump?
Not necessarily. Selling put doesn't mean that price gets attracted to that level. There might be open interest at certain price, but if somebody has sold a put, say in October at this lows for say maybe 3,400, it doesn't mean we will go and hit 3,400, right? And it hasn't happened so far, right? So yeah, I don't consider that as, see, one thing to be clear about is there is no one magic indicator in the market which is going to work forever. As Nick said,
Right.
This is one of the criteria, but how much of weightage do you give it to give that, right? And you have to use other things along with a certain thing that you are looking at to validate your point of view. And even then, it might not work out. Market is built for randomness. You are trying to make sense out of something that is random and trying to come up with your views. So you have to be extremely disciplined. I would say it doesn't matter what indicator you would use. If you have discipline to take profit and take losses, you can stay green. Last year in this bear market, we have stayed green purely because of discipline and position sizing. That is the key. I can go and give you these chart settings. I can make money, you can lose money, or it's the other way around. You can make money, I can lose money with the same chart settings.
Yeah, that's true. And yeah, discipline is key, and also temperament. I mean,
Yeah,
somebody will hold something because they have conviction. Again, borrowed conviction comes into play. You can give us the charts, but we may not have conviction in it, so trade the wrong way.
right.
Can we look at Dow Jones?
Sure. Let me go to I'll switch this to monthly and then weekly over here.
So Dow, once it broke, again, talking about the downward trend line, once it broke out of that, it did go quite high, because then everybody became bullish in it.
Yeah.
Um, so, like you mentioned 4,200, you are expecting on SPX, but once it gets there, it can change, that it can even go higher if
Further up. See, yeah, that is the yeah, I would say Dow is the trump card here. because if SPX hits 4100 or 4200, I wouldn't be surprised if this makes a new all-time high. And what would be the news headlines at that time? New high in Dow Jones, when everyone is expecting the market to crash like it happened in 2008, 2009, or early 2000s. That will be a news item, right? And this looks way bullish compared to other indices, right?
Right.
But again, see, even if it makes a new high, it can make a double top and still fall down at that time. That's again another surprise for all the bulls and bears. So market is built that way to create maximum pain for maximum people. And this is a perfect place where it came down to the pre-COVID high. It took support in this area and it has bounced. So it has done everything that it is supposed to do technically. And even here, if you see, it broke out, came down, tested the trend line from above. It has held so far, and it is bouncing up above now, right? So yeah, I wouldn't be surprised if Dow goes and makes a new high. Again, trump card to this is Apple and Microsoft, because those two are also a components of Dow, and Apple chart is not looking good. As I said earlier, if it fails to clear above 140, it is already trading at a resistance. This box here, let me remove this demo pro box. Yeah, this box here is a resistance for Apple. It's already trading into that resistance zone. So if Apple fails to clear above 140, it's a component of Dow, and there is a big magnet here at 120 and 108. So we need to be, it's a very, very tricky market to trade. That's all I can say. When you see a big divergence between QQQs, which are trading like at the bottom of its range, as though the world is coming to an end, and Dow is trading here as though there is no bear market, everything looks good. So this has continued for how long now? This is a weekly chart, and you can see if I count from this bottom, Dow is QQQs are still somewhere around this range, right, near the bottom range. So if I consider that way, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks have passed. And yeah, I don't know for how long it's going to continue. But if Dow breaks this trend line, be careful with all the bullish positions. And we will quickly go to 3200 at that time in SPX. And that might happen when Microsoft and Apple break down. That might be the only thing that is holding up even Dow Jones, actually.
Actually, Apple might not affect Dow Jones as much because Dow is an equal weight index, so it's not percentage basis. So like in S&P and Nasdaq, Apple is
Yeah, I know it's based on the stock price, but how many stocks are trading? It's based on the stock price in Dow Jones, right? So, for example, if Caterpillar, it's at 240, 250, right? This, if you compare that to Apple, which is trading around 140, so yeah, it is based on the stock price, not based on the weightage, as you said. But still, this has a big impact, both Apple and Microsoft. And Microsoft is fairly big. If you see 240, right, it's fairly big. If you put these two together, it's going to be a big impact. And not only that, right, if S&P starts falling, when these two fall and QQQs start falling, DOE will follow. Maybe it will be a laggard, but it will follow, right? Because this can easily break down from here, from this range. So there can be ripple effects and it might fall later. That is something we need to keep in mind.
So
Thanks, Pradeep. I'll let others ask questions.
Yeah.
Yeah, let's move to Nick, over to you.
Yeah, so before, I mean, we can switch back to Pradeep in a minute, but I wanted to kind of address a few things because I will be switching over to my cell phone and probably taking off here. Anyways, so funded account questions, and before we start there, so I just want to kind of let you know, so a lot of people are here, and then we'll post a message, but for those who are here, you can ask questions about this if you may want to. So you all know that we are a paid group, and we've opened this up in January. Thanks for the confirmation, Dave. But
sorry.
No, you're fine.
That was a big confirmation.
just throwing a joke out there, you know. But anyways, February on, the new price will be applied to, or once you leave and then decide 3 months later to come back, and then you will fall into the new price plan. So you will still be kind of grandfathered in. Another information, we will not be accepting PayPal anymore. We will only accept Zelle. And for those, I think every one of you would have Zelle and have bank accounts. So, and with at least a major bank. So in most banks, even some of the minor banks have Zelle, so it just shouldn't be an issue. So you guys, I will post this information again in the group for those who wish to continue. So do not send the payments to PayPal. They would be invalid. Yeah, so, and for those who have other inquiries, feel free to ask any questions in regards to that. I'll shut up for 30 seconds to see if anyone wants to ask any questions. Okay, I know it hasn't been 30 seconds. I can't be quiet that long, but I assume there's no questions. It's clear everyone will be grandfathered in, condition that they continue without leaving the group. So the new price will only be applicable to people who decide to join further on. Anyway, so moving on. Funded accounts. What questions do we have?
I am hesitant to ask, but I'm going to ask, and you can say go and read the instruction.
No, go ahead. Go ahead.
I just got confirmation for one account.
Okay.
So I did sign the paper. So now it's just like I have to enroll online and pay the activation funded fee, right? And then we can start that.
Yep.
Oh,
that's it.
That's all.
That's it. And just make sure that
just
the account
wanted
doesn't
confirmation.
Yeah. And just make sure that the account doesn't get busted. So obviously just trade the way you have been trading, make that money, post your profits. That's awesome. Awesome.
And Nick, Dushyant here.
Hey, Dushyant.
Hi. I was trying to trade on that, but I'm a little bit confused with the interface, and I'm not exactly able to understand how to trade in that funded account with the NinjaTrader thing. So I just wanted to ask if you can share like your screen and do like a simulated trade on how to exactly place the trade and the stops and stuff on NinjaTrader.
Okay. Today may not be the day, but we can do that. And I think we did it
Okay.
last time.
Nick, how about this idea when the market opens, maybe tomorrow night? I don't know. How is your schedule? We can have a quick demo for about 30 minutes.
Yeah, that's fine. That's fine.
I mean, we can do it on the simulated one too, right? Not actual live, but on a simulated account, like just so that we have an idea on how to.
So I think I have sent you the personal message for the chart trader. It's just as simple as you selecting the account, you place buy or sell. And then if you want to have an automated stop, you can do that also. But in like an OCO order, or you can just have a stop and just monitor for your exit, or have both. But you'll just have to make sure that you close the position. Yeah, no idea what that means. Okay. All right. I wish I understood the language, but so no comments, no funny jokes. But anyways, yeah, so it's just as simple as that. I can walk you guys through one more time, and and if someone else wants to as well, that'd be fine. That's
Hey,
okay.
Nick, one suggestion, maybe, again, you can definitely, just would be helpful, but maybe consider like, let everybody say what they would like to know about NinjaTrader, and maybe if we create small clips of video and just save that one.
But
so that way.
Yeah, that's a great idea, Dushyant. But here's the thing. So I know like 99.9% of the people on this call are not technologically challenged, right? Most of you work in IT or a better field. And there's something called YouTube, for those who you're not aware. NinjaTrader has absolutely tons of videos on their own, and Apex also has it. So to me, I will do it. That's not a problem. But to me, I think it's like, and this is me, I'm saying this way, it may come off harsh, but I want you guys to be able to do a lot of these things on your own, because it's not like, hey, like if he doesn't post something, then I don't want to trade, but you should be able to. And that's the purpose. That's the goal. And like a lot of you, like, and Dushyant, this is not against you or the other Dushyant, right? Because a lot of you guys have already proved that you can do it, and you just need a small piece of information that we provide and you can run with it, right? And that's amazing. And that's what I'm trying to say. So you can do some exploration, because there's no guarantee that I am doing it the best way. I am doing it the way that works for me, that works for my setup, that works because I have 4 monitors and I can look at multiple things, and I do it that way, right? So I have no issues, but we will do a session when the market opens tomorrow. But I would highly encourage all of you to just do a YouTube search, because you will find how to use NinjaTrader. Matter of fact, NinjaTrader itself has videos on their own website on how to do things. But what other questions about the funded accounts?
Hey, Nick, is there any way to know like how many days we have traded, like, or we have to look at the logs?
No, so you can go into your Apex funded trading account, and it will show you the exact progress. It is for when it comes to weekend, it is a day delayed, but it will show you the number of days you have traded, the profits that you have had, and all sorts of information. You can just go into account summary.
Okay, thanks.
Yeah, and just to say, if you have blown up an account, it's okay. I blew up $100,000 account because I was literally I got into this panic mode. I was $500 away from my final target, right? Like the profit target, like $500, and I've made bigger trades. and I had one losing day, and that's it. And that losing day was like under $200. So it happens. So if that's something that happened to you, it's okay. You just need to understand that why it happened. So
Sorry, I didn't
No,
mean
you're
to
fine.
drop off somehow my connection, but totally agree that actually I'm okay. I think I know enough to be dangerous, but there are tons of information available on YouTube also.
Yeah.
And you can do actually lot of fancy thing in Ninja compared to Thinkorswim also.
I still like Thinkorswim.
No, I think for
But yes,
no, definitely
yeah,
Thinkorswim has definitely
yeah.
lot
It has a
better,
lot
but
of automation
but
options for in
yeah,
the
this has lot of automation, and maybe it's easy automation compared to Thinkorswim, which
Yeah.
maybe I need to explore compared to NinjaTrader.
Yeah, no, you're right. You're absolutely right.
And one suggestion is, even if you know the platform well, go and see some YouTube videos just to get a confirmation, because whenever you start using any new platform, usually we end up making some mistakes with our orders and we tend to lose money. Don't be that person. Don't learn it the hard way after losing money. So
So I'll
put that
tell you.
effort, put
Yeah.
that effort now itself.
So now I'll tell you why I also blew up an account. I shared it with someone I was speaking to over the phone. I forgot that I accidentally had 6 contracts, and I thought it was just one, and I was going to scale in. It was too late to realize because it just stopped, and I was like, hey, where did my positions go? And then I had to go back into logs, and that's what, because my drawdown, your drawdown moves up as you make profits. And yeah, so that happened. So I accidentally, the last time before that, I had traded 6 contracts, and I didn't change the number of contracts, and that's how I got busted. But yeah, anyways, and 6 contracts will do a damage pretty fast, just so you know.
Yeah.
Hey Nick, this is Sangram. I have a quick question. Since you just mentioned the drawdowns move up as you make some gains, what do you suggest? Because there's a different account where the drawdown doesn't move.
Yeah, so
the static account.
Yes, so
Right.
there is a static account, but the stop limit on that is pretty low. So I believe the $100,000 account is 625, right? So you could do that. The only downside is like you better absolutely know, right, that you're not going to draw down $600. I know that I can't do it. I've drawn down like $1,500 or $1,700. Like I've been down, right? So
I mean, if we are careful in the first few trades to make some gains around 2,000 or 3,000, then I think
yes,
that be
absolutely, absolutely, yes. You are correct. So yes, that is also an option, and that is for people who are willing to wait, right, and not just be, like losing patience, like, oh, you know what, I'm just gonna buy it, yeah, for those you'd be fine with that.
Okay.
But you just know that it's, I think, like 625, 675, one of those, that's a drawdown. So, and that doesn't move up, so that remains. But
Right.
and I think the profit target is also lower. I think 2,000 for $100,000 account. But once again, you just have to $600, especially on ES. That's like under 15 points.
Correct. Yeah.
So
I understand that.
on one contract, under 15 points. And you've seen, like, even yesterday's post when we entered at 39.37, we had a total 3 contracts, a total of 21 points or stuff. So I personally like to think that I am a conservative trader, or my entries are fairly conservative. I used to post, like, aggressive, moderate, and conservative entries for positions based on what people's account sizes were. But now, because of the funded part, I tend to stay mostly just conservative. But even with that, it's not that hard to hit a $625 loss, even with one contract.
Okay.
So
That
that's
makes sense.
just a
Thank you.
caution, but it's perfectly fine.
Okay. Another question on the trailing drawdown account. So if I sign up for a 50,000 account, and if the account goes to 70,000, and since the trailing stop is around 2,500 or 3,000, if it comes down, my account get freezes, or what happens?
No. So you even with the trailing stop. So let's say we're gonna just do a hypothetical example, okay? So the numbers are not going to match with what Apex Funding is doing, but so this is just so you understand the concept. You start with a $50,000 funding account. Let's say your stop is $5,000, right? So you're truly, you can lose up to $5,000. So your limit is $4,500. Now let's say you start making money, right? And you made $6,000, for example, right?
Yeah.
So your trail stop now is going to be 50,100. And you can make 100,000 on top, right? Your trail stop doesn't go above it. Your trail stop still remains $50,100. They are protecting themselves after you make a certain amount of money, that you're not just going to go away and on a big gamble and just potentially lose it back all.
Oh, is it?
Lose
Okay, I was
money.
thinking if we go to 100,000, the trailing stop will be 95,000 something.
No, it's not.
Oh,
that.
okay.
It will go $100 above the funding.
Gotcha. Okay.
So if it's $100,000 account, it will go $100,000 or $100,000 and $100, and then it will stop there. So after that, you continue to keep making money. It doesn't matter. It will not. The stop will not move.
Oh, okay. Thank you for this clarification.
I have a question. So what do Apex make? So they get to keep a portion. That's what based on the FAQ.
Yeah, the first $25,000 that you make in profit are 100% yours. They don't take any money out of it. They charge you a monthly fee, whatever the monthly fee is, and then after 25,000, whatever profit you make, you will split it 90-10.
Okay. So do we have anything similar to trade stocks? This is all futures, right? Most of this stuff they allow.
Yes. I wish they had it for stocks or options.
So
I don't know if
what's
they
their goal here? Like they try to make traders earn money and they get to keep a portion. That's the whole idea, right?
Yeah. That's the idea.
And if you have to sign up for multiple accounts, do you have to go through the evaluation stage
Every single account.
time?
Yes, every single account.
Okay.
Yes. Even if it's $50,000 and you're doing another 50,000, yes, you have to. So what I have currently done, since I blew a $100,000 account, I just opened another 50 because right now the first one was 90% off only for the first month, and then it was 50% off. So right now they have 80% off and 80% off for remaining of the lifetime of the account. So overall, it's a better deal because you're still recurring discount. You're getting 30% more discount than what you would have before.
Right.
So if you blow up one of those older accounts, that's fine. Just let that account be. You can just sign up for another account. And I'm telling you guys, this is So you know how people started dropping off or whatever, there's like 29 people and now there's 20 people. Here's what I'll tell you. This is a secret. And I mean, not a secret, but a lot of people don't understand discipline when it comes to trading. And those are the people who will continue to lose money, no matter what group they join, no matter who they follow, no matter what indicators they use, doesn't matter. No one can help them because it's the mindset. They don't understand that when not to do something, and they don't know when to double down. And that's what differentiates people. And taking the small piece of information, you don't need to do everything, but if you have the right people giving you information, how to utilize that information, that's the key. That's really the key. So it's all in you, right? If I stop giving alerts, I can almost guarantee that a couple of people that we have, more than a couple, but I'm just to name a few, like Dushyant, Paresh, and they continue to make money. I know they don't have to tell me. I should charge them premium. Like I should charge them $100 a month, to be honest. But you know, then it would be unfair business practice. So, but it's just the fact that psychologically most people are not in the right place, and if you feel like you made money and then you just give it all up, then it's you need to understand. And this is probably, in my opinion, the better way to find out before you start blowing your own money, your real own hard-earned money in actual accounts. Just spend the $30, $40, $50 here and just trade. See if you are cut out for it, because if you're not, you know, your $40 a month is not going to impact my livelihood, believe me. So I'm not trying to sell on anything. It's just that this will give you the reality of trading. It is going to tell you whether you're cut out for it or not. And you know, and to me, the true failure is when you give up. So you know, what are you learning? Are you learning based on what mistakes you have made, based on what things that you have done right? And if you are, then it's a good path to be on. And if you're not, then you know, just pack your bags, just grind 9 to 5, and unfortunately or fortunately, that probably is the sad truth. And you are not going to find someone to tell you the real stuff. Like, I don't care. There's no sugarcoating here. Trading is not easy if you are not in the right mindset.
Nick, you had mentioned over the chat that you would also be talking about how to use the levels that you share. So
yes,
be covering those.
So levels. So let me ask Dushyant Makaria, right? I know you use those. Some other people are not on the call. Do you want to tell or say how you use them?
Actually, I'm driving right now, and I actually rely on one of my friends from India. So that's also, so it's all mixed up. I get like a 2-3 thing.
Okay, so this is how I will say to what I usually will provide a key level or key zone, depends on what I see, right? That area is kind of like your line in the sand. Above that, you try to target the like the upside targets. Below that, you try to target the downside targets. Now, while you're doing that, you have to understand also whether there is an acceptance or failure. There is usually a 5-point threshold that I provide, or I say that always to use. When you, let's say yesterday, I was night before I posted that I was more leaning on the downside overall, and then when our downside first target was 39.10. Now, if you go back and look at the yesterday's chart, or like how the action played out, realistically, when the bottom or the low for that day was 39.12, right? 39.12. So that means that it couldn't even, let alone just touching or testing that level, it couldn't even pass that level, right? Usually I would let it break past the 5 points to make give like, so if I said 39.10, I let it go to 39.05 to make sure like, okay, now this is the right direction. And now not even touching or testing that level and just completely reversing, that was an indication to me that we are not going down. That right there, not even getting that enough momentum on the downside to even get to test the first one, and that was a reversal. So when I saw that, by that time we were in that no trade zone, and that's why I didn't wait to cross the 45. I started at 37. That's when I was like, I bought at market price, and that's why I alerted. It was like, hey, listen, this is the place to go. It never hit our stop, never from that point on. And then, yes, the final target was 75. That would have been extended. But then because of the continued momentum, it went to my further targets. Now, it didn't take the fourth target out, because the fourth target would have been 39.95-ish. So that's what I would have targeted for, but it didn't go there. But once again, everyone who's been with us knows the third target hits, you are almost, you should not be trying to chase after the third target.
Are you sharing any screen, Nick?
No, I'm not.
Okay.
No. So this is the information that I post in the group anyway. So that's why I kind of separate it out and label it and try to give it like before the market opens, right? Usually at night, but sometimes I fall asleep. So, but also keep in mind that there are certain things that you have to understand. Like sometimes there will be times when the market will, just already will have, because of some news event or whatever event that is going on taking place, it will already be testing all those levels, right? It's already past that. If it's already there on the third, it becomes a bit tricky, because there are times that will continue my further targets, which I usually don't post after the extension. I don't post those targets. But I might if the direction is still down because of whatever event. So you have to keep in mind if there's an event going on, and that's the reason why either the market is falling apart or it's just ripping. And then we will target with caution further levels. But if not, usually you will see an exhaustion at the third. I would say at least 85% to 90% of the times. The third target would be mostly like, okay, we are done for the day, because those are based on the average true range on like how far, in my opinion, that I think that the market could extend. And also, because I know some people have asked me these questions, I do not post SPX levels. And if I do, I will say that this is for SPX. I will always only refer to ES. It's always that. I don't look at SPX. I don't care to look at SPX enough. I do buy options for SPX, but I don't look at SPX. Anything else?
Any indicators or anything that you use on your charts that we should be following or looking at?
And I give you the levels. There's absolutely nothing else that you need to follow.
Okay.
I'm just saying, I mean, I use everything that you saw on Pradeep's. And once again, it's you'll see some people using the squeeze, and they'll use the MACD and RSI, but they are all momentum indicators. They don't even know the differentiation between some of the indicators. And you see someone using those, like that means they don't truly understand that what the purpose of the indicator is. So don't get so stuck on indicators. there is definite use for them, but that is not the final source of truth, is all I'm going to say.
That's why I said I can give my indicators, and you might make money, I might lose money on that day, right? Because, for example, you might have MACD, RSI, whatever it is, right? The other indicators. But what is happening with VIX? What's happening with put call ratio? All those things, we are doing the number crunching for you and giving the levels. So I said 11,300 is the stop loss, like Nick said 39.10 on the index, right? On ES. So NQ came down to 11,308, 8 points away, and it rallied from there, like exactly similar to what Nick was saying. I was saying on NQ, and we also said, somebody asked when is the next entry point, right? I said buy it between 11,350 to 11,375. So we are giving you that information, tailor-made, after looking at various things in the market. So just know that there is a lot of work that goes behind the scenes when we give some levels. It's not just random, and we do it on a daily basis. Also, I said don't short it at 11,630. I know 11,630 was a good area of resistance, but I said don't short it, and it rallied all the way to 686 that day, and I said short it only at 690 to 710. It did not hit. It hit that level. It went to 686, but you can see that momentum and the maximum range it can trade up to. We got it right on the way down and on the way up. So just know that there's a lot of work that goes behind when we give some numbers. It's not just some random things that we come and tell every morning. And we do even tell that don't trade this range. That is extremely hard, guys. You might know the levels, and it takes years of experience for you to know when not to trade.
Here's another
on
thing.
Days not to trade. Okay.
Yeah.
If
Yeah,
you
that
trade
is
every
important.
day, you are bound to lose money on some day. You have to just sit tight and just watch the markets. There will be days like that. And we specifically don't give out any alerts on that day. We say, just watch the markets. Nothing to do today. And it's okay. We don't need to trade every day. When we get it right, if you position size it correctly, that is going to grow your account, definitely. And when you get it wrong, also, you need to be position sized in a proper way, because nobody can get everything right all the time.
Yeah. So another thing, it's just just to kind of tell you, someone had asked me this question. So the more and more people that you have that you continue to follow also, and this is not to kind of like say not, but there are things that you'll have to understand that the more like pots in the hands, the more confusion it creates and more biases on each side, because then that gives you a confusing message, right? Like, hey, this guy in this group is posting for calls, and this guy is posting for puts. Now, I'm not going to say that me and Pradeep both haven't done that before, but we both have came out making money, right? It's also the timeline. On the same day, we both profited significantly on each side. But then there are times where me and Pradeep might have a conflict also. And then at that point, it's like, hey, is it a day that I should trade, right? Usually we are pretty aligned. I would say like 95% plus. Me and Pradeep are pretty aligned. We might just have a different way to trade because he focuses a lot on NQ. I look at SPX or ES more predominantly. I actually don't even look at NQ unless Dushyant or someone is asking, and then, you know, if I know Pradeep is busy or something, but I usually don't look at NQ. So, but yeah, so it's just know when, if you don't need to trade, you don't need to trade. And when there's a lot of conflicting things, then it's just better to just take a backseat, because you're just saving probably money, and by not trading. So on choppy days, it just kind of destroys the account and destroys the profit that you've made, because it will scare you to the point where you are just going to exit your positions and probably go back and then chop around and then trap you again, and then it comes right back down, or goes against you, goes back up. It's those days you don't want to be trader. So give yourself a target that this is what I need to average. And if I make, let's say my target is $300 a day, and if I make, and you happen to make $1,000, you make $1,000, don't look at the computer again. Don't touch a trading key. That's fine. And that's where most people can't stop. The greed, I get you. It gotten me a couple of times, so I'm not immune to it. But I try to do better every time. So
this is Akash. I know like we've got two groups, one for the discussion, other for the alerts. And there are some important discussions that come up based on questions. Is it fair enough to ask if we could post the responses in the alerts for those who are not following the group periodically?
Yeah, but you should. I want everyone to follow the group. I just haven't taken the liberty of removing the people who are not in both places. But that's the whole point. Because and what kind of questions would you refer to?
Like the no trade zone question that came up in the discussion, where Pradeep kind of answered it, which was helpful, but probably wasn't on the. Yeah,
I see. I thought I posted it in that group of not to
Yeah,
trade.
I think we usually give that in the alerts if it is sent out as a morning pre-market observation, right? That Nick sends out, it is posted in the alerts channel. And even when I send out the levels for the day, I know I have not been sending it recently. I'm giving it on the fly during market hours, but if I post it, it will be definitely in the alerts group.
Yeah, it might be like a mid-market or midday observation because someone asked or something, and that might be to a direct response to someone. But yeah, we can try to post moving forward all of it just in the alert channel, because I know that's why we have two separate places, because there were people who just wanted to be notified for an alert, and they just usually at the end of the day or whenever they have a moment, they'll just go into discussion group and look at it. But they predominantly have or notifications on for the alert channel. So that is why we have two separate, and that's why I want everyone to be joined in both places. But there are some people, there's like 12 people who are not there, but that's fine.
Yeah, I'm not one of them, but just checking if you could use the LX channel more legally.
Yeah. No, that's a fair request, and we will try to get on that. But every now and then, mistakes will happen. So I would also try to protect with ourselves with that caveat. But it's never intentional. Let's just say that. Its intent is I would rather want everyone, but at the same time, I was the one who always wanted to keep the alert channel pretty clean. So that's why we don't post charts in the channel and stuff. So it's people don't have to scroll through multiple things, right? But so it's just hey, if it's an important message for that alert, then I'll plug it there, because I want anyone who has looked at this alert to see that.
Nick, so while we are talking, when you send an alert, So we get a pop-up in both groups, discussion and alerts.
Yes. Yes.
I don't know. I mean, is there a way to suppress one of them, because
you can just mute the notifications on the discussion group if you want. If you don't want, like, everyone in the group is going to ask questions or talk about something, whatever that may be. So you can silent the notification on in Telegram from the group, right? And then you can just keep an alert on for the alert channel if that's what you choose to. That was the whole intent of having two separate places. So we can have a place for people to, if they have questions to ask, and a place for us to post things so it doesn't clutter with everyone else's message.
I see. So your intention is, if somebody is in the discussion group, they will not miss the alert, right? That was the intention.
So if someone is already there, they don't necessarily want to have like two places, then that's still there. Right. The alerts are still being notified over in that portion. Okay. So
I wanted to ask a question on the funded group. So I know sometimes you post these trades for funded account. So what is the risk if I go in my own account, that kind of trade?
Nothing. You just have to manage it. If you're willing to buy 3 contracts, 4 contracts, and for capture 5-10 points per contract, and then you can take the alerts either account. Now, this one day when I was traveling and I bought it from my phone, I didn't do it on my funded account. That's why I didn't post it. It was for funded account, but you could have taken that trade in the funded account also. I'm just kind of saying that I'm taking that trade in funded account. That's for that. So the trade can be taken anytime. It doesn't matter. But it's just like, hey, now, if you don't have if you don't have enough money in your regular account to buy 3 contracts, if I'm buying 3 contracts, then it's going to look different. So that's all I'm saying.
Yeah.
So if I'm managing 3 contracts or 6 contracts, and then my strategy might be different than you just holding 1 contract, because I might just exit, 10 points, and I might just exit even though my target is higher, but I don't want the drawdown to hit, or I don't care because I have 3 contracts, that's 30 points. I'm good. Like I could wrap up and close the shop for the day and be done. That's it. Right? You might be like, oh, it's only 10 points. That's fine. I mean, to you it might not be okay, but that's why I just write it. But the alert is an alert. You can still take it. Same thing with optional alert. Optional alert is like, it's just a little bit more on the riskier side that I don't calculate for the book. And now I might just make this change moving forward, that it's because it's hindering me and my trading style, because I like to buy, because of the account size, I might buy something else or just a plain call, but then I also buy the positions that I post on there, right? And that and once again, it's a different way to start thinking when you're trading different sizes in different accounts. So, and then now I have to do the risk management also, which I have been doing so far. But then there's so many different variety of people who have different sizes of accounts. So, we might, or I might just say, like, this is an alert, position size accordingly based on what how you want to allocate, and that might be it, because it just someone had brought a good point last year, and that I'm still thinking about that, and I don't remember who it was. It may be Raja or someone, but it's just more so of like, hey, we are basing it off of $10,000 account, but if I only have a $10,000 account, then I cannot day trade, which is fair enough. But then there's multiple ways you can do it. You can have different brokers. You could have you could trade accordingly, and utilize the trade that that you can only do 3 trades round trips, and that's it. So But then it's a fair question and not to be ignored. And that is why, like, yes, I position size it based on 10,000, but I do trade more than $10,000. So I don't have the day trading problem, and some of you might. So that's why I want to kind of move away from that gray area of like, hey, I couldn't have taken 2 trades or 2 contracts because I just couldn't, right? And I understand that, but that is why I want to kind of get away from it, or just
Nick,
let you guys figure it out. Yeah.
I want to take one question on similar lines that someone pinged me now. They had to drop off from this chat, but asked me to answer it. So maybe since it's getting recorded, they'll come back and hear it later. So the question is it possible to alert that this is a potential day trade because of the small account restrictions where you cannot enter and exit on the same day? It will be considered as a day trade. So I want to, it's almost similar to what you were mentioning, Nick. So what I want to say is, if it is a same day expiration options, there are no 2 ways about it. It is a day trade, right? Because you are entering on the same day and it is expiring on the same day. If it is SPX, you can afford to wait because it's cash settled, but you never know. You might lose the entire profit you made if you wait until the end of day. And letting it settle for cash. Very rarely you can leave it if it is deep in the money and you know that it's not going to get into loss. You can leave it for expiration, but generally we prefer taking profits. That's why we alert it. Sometimes we have even left it for closing till the end of day if it is deep in the money. So point is, you should know that it's a day trade if it is same day expiration option. If we are giving spreads which are, say, 3 weeks out, 4 weeks out, you can assume that it is probably for a longer period. It's a swing trade. You can afford to hold it for a couple of days, like we did with Netflix. We also have a spread for Lulu. And we did that for Amazon. Bought it when it was around 83 and waited until 95. So things like that, right? So you know that it is for longer term hold if the expiration is 2 to 3 weeks out or a month out. So that would be my answer. If you cannot take 0-day expiration options, don't trade. Keep a count of your day trades. Also, we have said this in the past, you can open multiple accounts, right? If you have an account with eTrade, you see if you can open an account with Tastyworks or Thinkorswim. That way you have 3 different accounts and you can keep trading one account in each week. Right? If your account is less than say $5,000 or $10,000, that's what you can do.
Also, here's another thing. Even a caveat to this, I could give trade that is out 3 days, 4 days, 5 days, right? But if it hits a certain, it hits a certain profit.
That's a good point.
I don't give a crap. Like, I'm taking it off. That's up to you.
Right.
I will tell you that this is time, and it could be just because it's giving me enough return at this point, or it's getting to a point where I don't really even want to hold it overnight for right now, because there are times that, like yesterday, I didn't expect a 75 to go too far out. It actually went to the next and beyond and not hit the other target. Like the next one was 85 and then was like 95 to 4,000. It didn't. It stopped at 90 something. So can it happen? Yes, but if that kind of things happen, I may not want to be a long holder. If it had stopped at 75, I would have been like, could be expecting, hey, another rush up in the morning before we come back down. I could have a working order pre-market and just be done, right? So I'm not gonna just to kind of protect Pradeep and myself. If a profit target hits, it hits. That's as simple as that.
That's a good point. Yeah.
I'm not gonna hold on to something that is already making me money, and no, that's not.
One way to do that, if you still have a restriction, say we enter same week expiration option, or even a 3 weeks out expiration option, and on the same day we entered the trade, if the profit is say 50% or 100%, convert it into a spread. Or if it's already a spread, you have no other option but to take profit at that point. But if you are still having a restriction, we will be posting our exit. But if you cannot exit, you should have your own way of managing it, like convert it into a spread, protect your profit, because you never know what will happen the next day.
Yeah, or convert it into a butterfly for that matter. I don't care.
Yeah, right.
It's all that is fine. I'm just saying, like, you can't, because when the profits are there at a certain point, you have to take the profits. And I'm going to tell you this very bluntly: 100% profit, and if you haven't taken it, that's your fault. Don't come to me like, well, you didn't post the exit. It's by default. 100%, you always sell half, always sell half, always sell half. If not, and if you have one, I don't know what you're thinking of, unless I've said like, hey, this is what you're targeting, don't sell it at 100. If I haven't said that, take it off at 100% if you only have one contract. Like, I don't know why you would not. So it's I mean, these could be considered as unspoken rules, but like, you don't leave 100% profit at the table. That's all I'm saying. No one should have to tell you this, not me. Like, any group shouldn't have to tell you this. No one should have to tell you this. You should know 100% profit, you take it. Now, can you say like,
and a lot of people are good at doing that?
Yeah. Oh yeah.
In our group.
Yes.
I have a bad exit, but somebody in the group says, oh, I exited for 100% or profit, which is more than what I made.
Yeah,
so
but
that is smart.
Yeah, no, and think about it this way, right? I get the short end of the stick most of the time because I post, because so they are aware. Like, I quickly see like, hey, what am I getting filled for? A lot of times, in the most recent example for that butterfly, every single person made more than 200%, right? And guess what I made? 120%. Right? I'm not worried about it. I'm not mad. Matter of fact, I actually, because of what that worked, I didn't post the next day's butterfly, which was, I was also pinning at 3,900 for the SET, which settled at 3,904, and I had a $15 wide, which for $12 plus, right? So that would have netted me $800 plus in profit. I was going to post that, but then because of the profit, but then I was like, what are the odds that it closed here and it opens right there? Right. That's literally, I even closed my position that I had. But anyways, and I should have just stuck to what I had at least. But point being, it happens. And most people, especially the ones I just mentioned the other day, they're like 4 or 5 people, they always get better fills, always get better exits. So, but either way, it's but at 100%, you should always take at least half. If you have one, take the money off. There's no shame in that game. That's take the money. Right. Anyways, any other questions regarding anything, the monthlies, how to send the money? And I will post all this also in the group or for the funded account, whatever the questions may be, because we are coming pretty close to where I would want to end this session, unless Pradeep, you want to continue.
No, I see that already about half the people have dropped off. Yeah. So before we see more people dropping off,
they don't want to hear me, man. I don't sound as good as you.
Yeah.
Like, oh, here we go. He's over here.
Hi, Pradeep. Hi, Nick. I was just saying. Sorry, can you hear me, Pradeep? Nick?
Yeah. Yes.
Okay, I was just saying. I think the Microsoft earnings is on Tuesday.
Okay.
And my other thing was like, yes, I was trading on the phone, and I was doing paper trading since I'm just a new member. And the last trade, when you said close, exit, 39 something, and it was an ES, and I just missed out on the phone your exit. And luckily I kept it open and I closed at your stop loss, the exit trade. So sometimes we need to be careful on the phone as well when we're not watching your trade alerts.
Yeah.
So
you closed it at the stop loss? Is that what you're saying?
No. I closed it with the
original exit.
Original exit target, which you exited early.
Yeah. So I know.
You mean you're the one who held it up to 3908, the pinning? Butterfly, which got pinned for
the futures. He's talking about the futures that I had the 39.90, that choppy day when I was the buyer at 38.60, I think, or 64. I think that's what he's referring to, right, Ketan? And you wrote it to 39.90. That was the original planned exit, and I exited like 85 or something.
Ketan, we cannot hear you if you're talking. You might be talking on mute.
Okay, just. Can you hear me now?
Yeah. Yes.
Yes. Okay. This is the 39.37, I think.
Oh, 39.37. Okay. So I see what you're saying. The yesterday's trade, futures trade.
Correct. And you had 3 contracts open, and then you posted alert exit before the target.
Yeah.
Around 49, I think.
Yes.
So no, that was actually, I'm lucky because I was just doing a paper trade just to see, because I'm on a free group right now.
Yeah, it's good. So a lot of times, so one time when I was traveling, when I did the trade and bought it at 60, I think someone actually held it for the 90 target. The target was not bad. Here's the thing. That day I was at the airport, and then my wife picked me up from the airport, and I started driving. So I'm driving and looking at the phone, and I can't really see a lot of information that I would see if I'm in front of the computer. So at times I'm just like, you know what, just take the money. I was making almost $900, and I was like $900 in under 30 minutes. I'm not going to complain. I'm just going to, just be done. And a lot of times that's what it is. And yesterday I was trading another evaluation account that I didn't want the trail to continue to go down. So I'm like, if there is anything that pull a pullback or whatever in that, and I had more contracts. So I was like, well, should I take it off or should I leave it? Just leave it. But then I was just like, you know what, screw it. I'll take 15 points. I don't care, and be done. Right. So
exactly. Yes, I agree with that.
That's the mentality behind it. And then, and sometimes honestly, it's just, if I'm seeing something that I don't like, and that might be nothing, that might turn out to be nothing. And then sometimes it could be just very well that, hey, I'm going to be in a meeting and I don't want to monitor it. But I will say at those times, like, hey, the exits are still good, but I'm exiting at this point. So then I leave it up to you whether you want to follow the exit with me, or you want to continue to hold with moving stop losses up. However, but it's just like, if I'm going to be distracted, and I'd rather not keep the risk on, and just turn it off. So that's
I agree. The other one was the Lulu trade, which we have, I think we are holding still, which was still February 7th, which we have 3 weeks.
Yes, I'm still holding that. That is, in fact, the only bearish trade that I currently have. Again, it's, I don't know whether it's going to work out or not. Okay, I'm taking about $550 risk. That's the only bearish trade, a defined risk strategy that I currently have. So I'm okay holding it. So
because yesterday I saw it like before the move, it was like a little loss, smaller loss, but still.
Yeah, it's at a small loss, but I think we might be able to come out with profit as well. Let's see.
Let's see. Okay, got it. Thanks a lot.
No problem.
And another thing is we always post exits. Yesterday's trade, I didn't post an exit because that's like, it's a lotto trade and it's a cash settled, and it obviously evaporated after the other half. Like the first half, 100% hit, you should be out with half. And that's why I kind of was trying to make a point that, we have a lot of new people, and people who've been with us, they know, and they should know, their expectation is at 100%, you always trim into half position. Simple as that. But either way, but those cash settled and when you are doing the last minute 15-minute lotto trades, I don't think I need to post an exit because those will be usually cash settled anyways. So, but other than that, there's not a trade that we don't post an exit for, profit or loss. Regardless, you would know exactly what this trade. So if Pradeep has a trade, if he's going to exit, he'll post when he exits for whatever price at that point.
Yeah, even if we are letting something expire for loss, it did not work out. Like this week, I had to leave some QQQ calls expire at loss. Know that we are involved in that trade. Okay, we are not posting something where our money is not involved. It's just ethical, in my opinion. If somebody is doing it where giving some levels, it is not good if they don't have skin in the game. Right? And me and Nick, we are trading our own money. We have a skin in the game. We are going to make a loss, and it's all tracked. At the end of the month, we are going to send out what worked, what did not work. So you will be able to see at the end of the, so it's not about getting something wrong. We don't have any shame in calling it a loss or booking loss. Accept the loss gracefully, move on to the next trade, because our assumption is if you have a $10,000 account, you should be able to risk at least about $500 to $800 on a trade, unless we call it as a lotto. If we call something as a lottery ticket, the assumption is that you're going to buy only one contract per $10,000 in your account, because there's no stop loss for a lottery ticket. You either win or lose, and you should be able to take that loss of about $100 or $150 if we call it as lotto.
Okay, thank you.
Yeah, I have one question. Sorry, it's getting late. So for SPX, somebody told me there is nothing like a wash sale. Is that correct? Anybody have any thoughts?
SPX doesn't need a wash sale. You can't really own SPX. You can't buy SPX. I mean, you just trade options.
Right. So
yeah,
is that the reason there is no wash sale? Because, like, say, if I buy an option for 5.
Well, I don't know if that's the reason, but I mean, that's just how it is. SPX is no. You're only going to trade options. Options doesn't have wash sale, right? Unless you're buying like leaps, maybe, or like something that is maybe that could be configured. But SPX has the tax advantage, so I don't think you can do wash sale and tax advantage. I don't know how that works. That's not a. I don't think that's a question for me, but yeah, if it's not, it shouldn't matter. Like what is the reason why it would matter, if I may ask?
Right. So if I buy an option SPX call, for example, for 5, and then I add one more, when it dropped to say 3, I was still hopeful my trade will be doing fine.
But for wash sale, you have to buy something and then own it for what, 31 days or something. So you're not going to buy SPX out 31 days out.
Right.
I don't think so. And if you were buying 31 days out, that's fine. And if it drops, I'm assuming there would be a certain point that you will call it a stop. Anyways, I don't see a scenario personally, and it could be one, but it's just you get tax advantage 60-40, right? 60% is a short long-term tax and 40% is a short-term tax on your profits. So that's what I know.
Okay.
So, but I don't worry about the wash sale.
Right. So when it comes to options, like say Tesla option, for example, do wash sale come into picture? Like say,
I think so. But that once again, then you're talking about like leaps and stuff that you're buying at a certain price, you sold it, and then you bought it again. But the transaction has to be a 31 days difference and stuff. Once again, I'm not I guess any kind of financial advisor or any licensed individual to tell you. So you may that's something that you may have to talk to someone else about. But yes, it does exist. But the reason why I said for SPX is like I don't see mostly anyone that I know personally that buying SPX 31 days out, or like, you know, buying something that far out on a projection, taking a loss, and then buying it again type of thing. Because you have to buy something 31 days out in order for you to just buy it, sell it even now, if you're doing it other way around, and then having that instrument still be available 31 days out. So I don't know. Too much thinking for me to do.
Hi, Nick. I have a question. So I joined a group recently and I'm trying to follow your alerts. So Thursday night around 11:45 p.m. you posted an alert saying key zone, no trade zone around 39:30 to 39:45 and upside target and downside targets, right? So then the next alert around 10:35 you posted you bought 3 contracts around 39:37, but your no trade zone was around between that.
Yes.
So
yes. So that's why I explained on why I did that, and I posted a trade that I personally bought because I said that when it was going down at night, I said that my bias is still probably on the downside. When it was going down, it didn't even touch the 39.10, or matter of fact, not it. I would usually like for it to test and reject. It didn't even test it. It reversed from 39.12. That showed me the strength, and it went all the way back into the no trade zone, right? So it moved another 27 points higher, where I would have, like, if it would have broke 39.10 and went to 39.5, there was no way I was going for the upside in that moment, right?
Got it.
It didn't even test. So sometimes this is another thing that I don't think I mentioned it enough, but a lot of times you have to not only see what the market is doing, but also keep in mind what it's not doing.
Okay.
And that's why, like, I didn't want to wait another, 3 points or whatever, 7 points to get out of it, because I want that 7 points. Because at this point I'm running 7-point tight ship, and then I'd rather target the upside because it's not coming back down.
Gotcha. Thank
right?
you.
I mean, it can always do it. It can always go fail also from the top, and that's what would cause it to be a choppy day, right? So and so the for it to fail, it would have done the same thing to go to like a little past 45 and try to reject it, right?
Right.
But and that's why I even said, like, okay, like, let's move it to 49 something, whatever, and not wait to the tick to exit, because that was the resistance zone. A day before I said that there's the gap at approximately at 44, and so that's how I was watching that. So I was like, I would rather play a breakout, right, and not miss out on it. Now, could we have been holding further? Probably, but like with 3 contracts, I didn't really feel like it, so that's why I took it off also much faster. But yeah, that was the reason, because it rejected the bottom and it wouldn't come back. That was
that makes sense. Thank you. And another question is from the initial alert at 11:45 p.m. So when do you go usually short on that? When it is out of the trading zone, it's below 39.30,
So
you go short on it?
So when it's a zone type of thing, right? So there are sometimes it will be a level and sometimes it would be a zone. So zones are not as often posted because usually it's just a level. So, and
Okay.
so it depends because I don't like to get into something pre-market, right? I like to trade after 9:30. So I will look for an opportunity to get back in because remember there's 3 targets. And then if there's something that we already are kind of seeing like, hey, it's rejecting, like you see what it's not doing once again, rather than what it is doing. Like I just talked about yesterday, that it made an attempt to go in a certain direction and it failed. That says that if it's failing, it's going to go completely opposite because it failed. If it would have went through, there was no way it was going to go back up at that day. I mean, it would have gave you an opportunity because people are still going to book certain profits because like the way I'm seeing these levels, I'm sure there are plenty other people who are seeing this, right? Now, everyone might have been like, okay, no, you know what? This is what I'm going to target and this is where I'm going to take it off. And when they take off, it goes, the market bounces a little bit. And that's your opportunity to kind of be like, okay, it tested 39.05, for example, and now it came back up slightly a little bit more. Let's say back to 39.15 or whatever, or a little bit above that. And I will find an opportunity at that point to short. I wouldn't just jump right in, and if you have enough cushion to take the stop, right, then you can. So
when it goes below the first downside target, that's when you try to look at the short position, is it?
No, it's the confirmation on like
so based on the levels that you post the previous night. So when do we take the short position or when do we take the long position?
So
can you guys see my screen? Nick, let me answer that question.
Okay.
So say we have set this as no trade zone. Since I'm not good at writing, I'll just say no trade zone. Okay, this is our no trade zone. If we give this, correct me, Nick, if I'm wrong, I expect that if we trade to the upside, come back and test this zone, it's a buy. If we break below, come back and test this, it's a short. If we trade into this, you need to be careful. That's where you need to manage your stop losses. You need to be careful here because it can keep chopping around in this zone for a long time. This is consolidation zone. So if it breaks below, comes back and tests this, that's a short. There can be a bigger move to the downside. If it goes up, comes back and tests this zone, it's a buy. There can be a bigger move to the upside. So in the case of Friday's example that Nick gave, he had called up to 39.40 as no trade zone, but he entered slightly somewhere here at 39.37 and it moved up and it never came back. This never happened actually. There can be days where it can just directly go all the way up. All right. But if you are someone who wants to be conservative, this is especially good strategy for your funded accounts where you want to be conservative. Wait for a confirmation and then you can enter long. But if we are giving an alert, you can take it because we might be looking at something else at that point of time and we will just alert it. But if this is only for your own management of trades, I'm talking about how to use the levels.
Right. Yeah.
So I'll tell you why I took it, right, and the reasoning behind it. So when it rejected once again, so I'm telling you this, that you you also have to see what it's not doing, not only what it's doing, right? When the big candle came in, then you are seeing like, oh man, it's a dump, it's going down, right? That's what everyone else is seeing. But then I have said this in this group and before as well, that when it's impulsive moves like this, they usually get retraced within the same session. Now I'm looking, so I'm not going to just jump in. And there are times that I've jumped into short right at the bottom, and I've caught the bottom of the short. So that means that I've like basically bought it at the highest price that I possibly could, and then it reversed on me. I have done that. So when this is doing this, when it's coming down, then I know now better not to start, jumping the gun and let it come back up. But what it did was that it was when you start seeing that, when you are looking at it, okay, it's 39.10. Where did it reverse from? It's 39.12. And then it didn't even take a breather. Like, it just kept going on and on. There was like one red candle that just got absorbed, and it kept going up. Right, it literally kept going up at 37. Like that one candle that where we ended up buying, it after it hit 37, it went down to 27, went back up, and I think somewhere in that zone, or after what, like 10:25, if we bought it again on that dip. I'm actually looking at the chart. So Pradeep, you want to open up, or maybe, you know what, this is what
sure. I'll just complete this.
Can I just
share? You can see this. Just a second, Nick.
Yeah.
So okay. Nick had mentioned about this level 39.10, and I had mentioned about 11,300, and the low was 11,308, and Nick's level was 39.12, and the low was 39.12. So when we both are aligned, usually it's a good indication for you guys to make use of the levels, that it's a pretty strong level. So keep an eye on this. You can devise your own trades if you are smart to use the levels that we give. Yeah, over to you, Nick. You can.
All right, let me see.
Or I can share it. What do you want me to show, Nick?
That's fine. I can just I wanted to share something. Host disabled. You disabled me. What? All right. I am gonna share screen. I don't want them to just see all my secrets. I got to be careful. Can you guys see my screen? I mean, you shouldn't be seeing anything useful yet.
Yes.
But can you see my? Can you see this?
Yes.
No. Okay, great. So this is when the market opened 9:30, right? A big drop, and now it reversed. So right, this is not what I'm like. This is not in the moment where I'm kind of like, oh, let's buy it. It's rejecting, because it could very well go back here and then it come back, right? So when this impulsive move is completely absorbed and this goes 37, right? And it comes back, I am seeing that it's not failing. It's still holding. It's holding. So this is when about like somewhere between around this time that we buy, right? Like, hey, 10:37 is when I posted. So this is somewhere, these are the candles where we bought it, right? And what we were targeting is a high volume node right here. And this was around at $50. So it's like, hey, if I can capture this move right here, that's all I wanted. I didn't care about the further move, because once again, I had a bigger contract, and that's all I cared for. Now, what Pradeep was drawing in that zone, you have to understand that, okay, that's a no trade zone, where the no trade zone was from 30, right, to 45. If I'm entering at 37, if it goes back into below the bottom level of my zone, I'm risking 7 points. So I'm here I'm being proactive because I have a confirmation that the bottom is rejected, right? The downside is rejected. Now I can have a stop at $30, like, because if it breaks 30, then it's testing, or it could have tested 30, but like my stop should have been like 29, 28-ish. Because if it breaks 30 again by a significant point, and significant meaning like more than 2 points, then it's likely to just break down again and go downside, or just be the chop if it doesn't make a new low, right? So it's and Pradeep knows more than anyone else about this about me, that I don't like to trade right away at 9:30. Like, that is a no-go for me. I have been doing it lately, not at 9:30, but like, within the first 30 minutes or a first hour. But I try not to trade within the first hour of the day, unless I see something like, oh snap, like this is like, I even had like 39.15 calls and everything for super cheap. I sold it all because I was like, yeah, I'm not participating in this rally, even though I kind of wanted to, but I'm like, oh, I don't want to. So, just to scalp it off, and just scalp it off some money and be done. And yeah, so that was the whole purpose of like what it's not doing. It's not going down. It's not letting it go down. And that's why it was, the whole trade was, okay, I'm just going to buy it. I bought at market price, by the way. So there was a plenty of time that it chopped around, and you could have got around like $33 also. Had you got in at 33, you would have had made more money. Your stop would have been much deeper than mine, which would have been good. But I just buy market because I have to alert. So you have to understand, and that, hey, listen, that my pricing might be a little bit more aggressive than I want it to be because I'm posting. 9 times or 9.5 out of 10 times, you will get a better pricing than me. Now I have to have at least a 0.5% chance or 0.5% chance that I do get exact bottom and you miss it. So, but that hopefully that answers the question, and that gives you.
Yes, Nick. Thank you, Nick and Pradeep.
All right. So what else?
So one question, I see verticals, iron condors and all those. So what kind of trades do we have to familiar with? Because I'm not much familiar with this kind of spreads and all those. So which kind of things I should be looking and doing some research and understanding? One is iron condor is what I saw in one of your recent trades.
So we trade all kinds of strategies depending on what suits the best. We can once this month is over, and when there's whatever newer people who are joining, we may do a session kind of just trying to explain how like an iron condor or a butterfly would work or something. But if you don't know exactly how it's executed, just know all the strategies needs to be executed in one shot, right, in one transaction. And if you have any questions, just ask. We'll be happy to post a screenshot of our trade so you know which leg is sold and which leg is bought, in what quantities they're bought, and you can try to replicate the trade that way. I would highly recommend that if you are going to do that for the very first time or something, then try it in a paper account. So whatever mistakes you make, that you make it into the paper account rather than the real account, at least for the first couple of times maybe. And once you know that this is how it's constructed, then you can see the price and be more comfortable with it, right?
Yeah, thank you.
So just ask in the group. That's why the discussion group is there. Be like, hey, can one of you post a screenshot for this trade? And usually the person who, either myself or Pradeep, whoever has posted the trade, will be glad to just post a screenshot. of what the trade should look like. I think I have done that before also.
Okay. And so talking to you, I mean, you guys are explaining very well, and I'm trying to understand what are your, how you're charting and how you're trying to take the trade. So is it too much to ask if we, what if we plan to do a live trading session once a week for a couple of hours, so that we understand how you're taking trades and what are you thinking in your mind and all that?
You're asking for a recipe to a chef? Is that what you're doing? What? What's wrong with you, man?
I mean,
no. I'm just joking. So I know a lot of people have dropped off, and so this nothing is 100% concrete yet. But me and Pradeep, we have discussed on just leaving our screens live for you to just be like, hey, if you have time and if you're watching the screen, you'll see if we are taking a trade or whatever, and we'll try to post also. But at least you will be able to just watch our screen while we are taking the trade.
oh, is it? Where is this happening? Sorry, I didn't see that.
No,
We haven't done that.
Just thought about that. We have
thought about it. We are thinking about how we will manage it, right? Because there's more to this than just like simply sharing screen. We are not a full-time trader, even though we may act like it, or we may trade like full-time traders. But you know, we all have a regular 9-to-5 jobs.
Gotcha. Okay.
So it may not, and we are just kind of like checking the feasibility of how we can do it, whether it would be, you know, a good thing or not. And so, but yeah, because you know, there's a lot more to it, right? You might be like, oh, I'm willing to jump on whenever you come on, but then there might be other people who's like, well, we can't jump on this, and you know, we've had people for the past year who've been with us, and like, you know, just based on just the loyalty aspect, which is big to me, in my opinion, that I have to respect their choices over someone who's just joined, you know, in a month. Not that that is any less important, but you know, I would have to kind of think about how I can, you know, be more inclusive of every individual that is on the group, because I want to. Matter of fact, I want every person to join, like when we do these, but you know, we have like 30 people, 20 people, and then rest, that's fine. And then they will ask questions of things that were discussed in calls like these. So, and you know, even though we say an hour, like now we are over 2 hours, and you know, just from one conversation, it leads to the next, and then more things come about when people ask questions. And that's the whole purpose of having it to be more interactive and be, you know, like, hey, what is your individual concern? And if you can talk about it, we can explain, and then it might answer someone else's problems also. So.
Yeah, thank you.
And also to add to that, it's Pradeep has done sessions before, and they may not have been live. I think we have done a couple of live ones, right? I know I have done one, at least, for sure.
Yeah, we have done a couple of live sessions. I think we have done it on Sunday night, especially when we are not working. Usually it becomes difficult during the day when we have to manage work along with
I think I done it on a regular day also, when I had a day off, and I was just doing nothing, and I had to
and occasionally I think we have gotten on call, just
call
a voice, you know, just to discuss about the markets on very volatile days. We have done that.
So okay, well, if there is nothing else, then I think we can wrap it up. I need to go some cabinet shopping.
All right, thanks.
Thank you all for joining. Thank you.
Thank you, everyone.